If you are a retail investor at home watching tonight, you probably have two burning questions. How much worse could it get, and how do you know when it's safe to buy stocks again? Guy.
I think it's got about another 7 to 8% worse to the downside. But I think the market has three.
Really?
I think the market has three things going for it. And Steve mentioned one of these things last night. There's a chance Fed Chairman Powell backs off some of this hawkish language. That would be encouraging. Number two,
maybe that would be encouraging
in the short term. Okay. In the short term. Number two, I think there's a chance maybe President Trump and President Xi get together and maybe get some accord. Maybe there's pain on both sides for them to come to the table. That's number two. Number three, we're on the verge of earnings, and maybe earnings and guidance will be good. So those are the three things in your bull camp. The other side, how do you know when it's over? There's going to be a day where the market washes out and the volatility index, which was up pretty much all day today, despite rallying at a certain point, will be down. When you see that day, I think that's when a bottom has been put in.
Today was pretty heavy volume. Was this it?
Today was heavy volume, but you need the 3-day rule. It's the same thing with the indices. You need to see it stabilize. 27.65, that was the 200-day I told you to watch yesterday. Broke it, violated it. 27.10, that's the low. Why do you think it's negative if they back off raising rates? I'll switch gears real quick.
If they back off because he feels like he needs to answer to the president, that's bad.
But we're not going to hear that. He's just going to either back off or he's going to stay the course. So
yeah, but if he does it right now, a day after the president says that he's crazy, then it looks really bad. The optics are terrible.
This has been going on for weeks, so there's never going to be a time when he can do it without the president saying something.
I don't know about that. I think there's plenty. I mean, you get some kind of weak data point, economic data point, that gives them an excuse. But if you're looking at an economy which right now is doing fantastic, then you really should be raising rates. And I don't think I think the Fed loses a ton of credibility.
Do you think the economy is doing fantastic right now? I mean, is that what the markets are telling us? It doesn't feel like it.
It does not feel like that. The market is telling you that rates are going too high at this point in time. For the market, it's digesting the fact that we're having a rotation. Now, I can come up with a lot of reasons. We have a trade war that continues to go on. Yeah, that's going to lead to high inflation, low growth. That's not great. China's slowing. The rest of the world's slowing. That's ultimately
the
not
question
going
is,
to
when
be
do you
great.
buy it? When do you buy it? Not when do you keep selling it.
I didn't say we were selling it, but the question was, first of all, the question was, is it bad if the Fed backs off? Yes, I think for their credibility. Number two, what's the market telling us? The market's telling us there's a rotation going on, and we're worried about the rest of the world.
Are you worried?
I'm always worried. Am I that worried? No, not really. I mean, I think, the market, it doesn't use a tiny scalpel to get to exactly efficient prices, right? We don't know. They're never exactly efficient. So to your point, could it go down 7 or 8? That's quite a bit.
It's a big one.
That is a really, I don't foresee that, but who knows? I think it's really hard to know when the bottom is in. You really only know for sure after. I do think when you are at the maximum pain where you absolutely cannot stand it anymore and your inclination is to sell everything.
That's when you buy.
That is a good time.
Did you get to that point today?
No.
You did not.
I bought a tiny bit of FedEx today. Yesterday I said I bought a tiny weeny amount, I think I said, of, Google call spreads and Facebook call spreads. So I don't think that, I hear what you're saying, what the risks are. I think the economy is doing really well. We'll see. We'll get a good look tomorrow, not only at J.P. Morgan's earnings for themselves, but they have great insight into what is the economy looking like right now? What does it foresee? That's going to be very important.
There was some panic today. I didn't see panic yesterday. I definitely heard panic today.
How did you see panic?
When we started to rip through the moving averages, program orders start to flood
like the
through
2
on the sell
o'clock hour
side.
Trading.
All during the day, when you started to break through all these different levels and didn't hold, that's when they started to sell. Then when the positive trade headlines came out, they bounced them, and it didn't hold, which made the selling more ferocious to the downside.
Right. Oh, so the scenario is down 7 to 8% or so.
From here. Why would that be so catastrophic, though?
What are the bear points that get us there?
Well, pre-announce, good earnings, and then companies say going forward guidance is lousy, and that will exacerbate the selling we've seen already. There's a very good chance that we've seen 4 major companies over the last couple of weeks say exactly that. So the inflation pressures they're feeling, and we'll talk about the Fed probably in the next block, but it's backing up exactly what the Fed is doing. That's number one. You still have huge emerging market risk. Those markets have been down, no bounce seemingly in sight. You have the Chinese currency continuing to devalue. That's a headwind. If it prints a 7 handle, I think the market will get concerned. The risks are all out there. The other risk, by the way, is, passive investing is great on the way up, and these ETFs and everything is beautiful, and Bob Pisani talks about it. I get it. We wax poetic. Passive is great on the way up, but when it becomes active, in other words, when people say, wait a second, what's going on? And instead of the passive buying on the way up, all of a sudden people start to freak out. You see it manifest itself, and you saw it today. I mean, the market went down from down 300 in the Dow to down 600 in about a minute and a half. You tell me that's normal? It's not, and it's based on...
But that's based on de-risking, quantitative stuff.
And we talked about it, by the way.
Spits out how much you have to de-leverage and de-risk.
And
it
we
depends on the price of the market where you have to de-risk and de-leverage.
So then what turned it around then? If it's down like that on those factors,
because if people start to do it, it's almost like a rebalance. If you do it ahead of the game, so the level was 27.19 in the cash, where if you broke that level, it was supposed to trigger about 50 billion in notional S&P futures for sale. As soon as it triggered, we rallied 5 handles lower than that. People prepped for it. So they already sold them ahead of that to get to that level where they could cover them.
That was like with the 100-day moving average?
That was the 200-day,
okay.
But that's not the 27.19 level was actually where risk parity accounts decided through their models where they had to sell the market.
Okay,
it's
so the computers do it. It still doesn't feel good.
Right.
I don't care who's doing the thought. It still doesn't feel good. You see the volatility index spike. We see a bid to gold, which we haven't seen in a long time. We see a strong bid to bonds. It doesn't feel good.
It doesn't feel good at all. I mean, and we probably, listen, maybe we got 7 or 8%. I will give you my rule of thumb that I use to know when there is a bottom. When I wake up in the morning and I look at the market and I want to throw up on my shoes, that's when you buy.
Did you feel that today?
I did not feel that way today. So I'm with Guy. I think there's going to be a time that you have, I thought it might be this morning, that you have a big down day, it rips higher and stays higher. Then that's the first time where you want to say, all right, you know what? I'm going to add 1/3 position here. And that's how we're going to look at it. I still think it's a tradable bounce, and we'll have to see with earnings. Earnings concern me. Floor Corp concerns me. Margins compressing, revenues slowing. Those things concern me. So I think you have a tradable bounce, and then we'll have to see.
So it's funny. You and Karen say you're both not ready to throw up quite yet.
Well, I can throw up without selling everything.
But what do you do before you feel that sort of capitulatory bottom? Like, what do you do in this period if you don't think this is the all clear right now?
Well, you create a list of stocks that at a certain price you buy regardless of what's going on in the world. Everybody loves Apple for reasons we talk about for the last dozen years. If Apple gets to a certain level, whatever that level is, in my head 185 makes sense, but it doesn't matter what I think. Facebook traded particularly well today. We talked about that last night. Got an upgrade. So maybe that stock is interesting now. So you make a list of stocks that at a certain price you buy regardless, and you stick to it, and you don't allow fear to interfere.
One thing I do try to do is look at taxes. If I have big short-term losses in something, I will look to sell that and buy something that will move right with it, right? So that way you could take the short-term loss, still have maintained a position in the trade. That's really the only thing I would do.
You have to have a couple of days, let's call it 3 still.
So when you say 3-day rule, do you mean from yesterday or from
yes,
today?
it starts from the sell-off day. So let's go back 2 days ago.
Okay.
2 days ago. But you can't make another new low. So if it goes now a 4th day where there's another new low, then it resets again. So you have to have stability in the market for 2 or 3 days before you actually buy the market.